Hey guys, my name's Matt Hogan. I'm one of the founders of Element Real Estate, which is a co-side-based real estate company. One of the things that's really important to me, both as a homeowner and as a real estate professional, is to understand our local housing market. So given that it was a new year, I took a look at all the numbers for Pacifica real estate for 2016 and the years prior. I analyzed them and I found some interesting things. I want to share them with you. I think they might help you make the most informed decisions as you move into 2017 and beyond. So the first thing I want to talk about is days on market. So 2011, 2012, homes took a couple months, 2 to 3 months to sell. 2013, things got hot. They were selling very fast. 2015, homes were flying off the shelf. And last year, they increased a little bit. For comparison, your friends down south in the communities in Half Moon Bay, in 2015, it took about 35 days to sell a home. In 2016, it took about 41. So all things equal, homes in Pacifica are selling twice as fast as they are in the communities down south. The next thing I want to jump into is list price versus sold price. Essentially, this tells you, did people get what they asked for their home? And 2011, 2012, you can see homes were selling for less than their list price. And then as things got competitive, substantially higher. 2016, although it was a little bit of a drop, still substantially higher than list price. Next data I want to jump into talks about the number of homes that are on the market in any given month. And this is important because less homes means less options for buyers, means prices go up. So again, 2011, 2012, you can see lots of inventory. As the market got hot, inventory shrunk. 2016, a slight increase. Still not a lot of inventory on the market, relatively speaking. Now we're getting into the good stuff. So this is the average sales price for homes in Pacifica. 6 years ago, $495,000. Numbers grew a little bit. And as we hit into 2013, prices took off. 25% growth, 10% growth, 17% growth. And last year we finished up 11% higher than the year before. Less growth than the year prior, but still strong growth nonetheless. The numbers that you see right here, the blue numbers, these are the numbers for home growth in the Half Moon Bay communities. And while they also had a very strong run, 2013 to 15, you can see last year was almost no growth. So it's a good question to ask, why is Pacifica still having double-digit growth while a lot of the other communities really didn't grow that much? And the reason is because Pacifica is still one of the most affordable communities out there. This slide shows all of the cities in San Mateo County and their average home price last year. Now you can see on the left here, you've got these uber expensive places to live. In the middle, you've got a bunch of cities that are in that $1 to $2 million range. And on the right here are the cities where you can still get into a home for under $1 million. I know it's crazy to call $1 million affordable, but relative to where you combine San Mateo County, it really is the most affordable. And this is important because it's one of the only areas that first-time buyers can get into the market. And first-time buyers are very important to keeping a market healthy and growing. It keeps demand up. It allows other homeowners in that community to step up and buy bigger houses. And because Pacifica is one of those only communities that first-time buyers can get in, they actually had a pretty good last year relative to some of the more expensive communities out there. So what does this all mean? Well, what it means is that the housing market entered a period of adjustment in 2016. A period of adjustment after a period of explosive growth is natural. Don't sweat it, don't worry about it. It's a way for the real estate market to stay balanced and healthy. And as we saw, the adjustment should impact Pacifica less due to Pacifica's relative affordability. So what does it mean for you guys specifically as you get into 2017 and beyond? So for buyers, in 2017 the market's still going to be competitive. If you find that perfect home, you're going to have to get after it. Be prepared to come in at a reasonable offer. If you don't, there's a good chance you'll get outbid and you'll be back at square one. Guys, rents are gone through the roof. I'm seeing $3,500, $4,000, sometimes more for 3-bedroom homes. Guys, if you're paying that amount of money in rent, stop it. Stop contributing to somebody else's net worth. Stop putting money in somebody else's bank account. If you're paying that amount of money, you can afford to buy now. And finally, sellers. You didn't miss the boat. The market's adjusting a little bit. The interest rates are going to keep that market adjusting, but it's still overall healthy and strong, and Pacifica is going to remain pretty competitive in 2017. The one thing I can say is don't overprice your house if you're serious about selling it. In a market that is leveling off, overpricing your house could cost you a lot of time and money. So that's all I got for you guys. I appreciate you hanging out with me. If you have any questions about any of this stuff, you're a seller, you're a buyer, you're a renter, and you want to become a buyer, give me a ring. I would love to hear from you. And wish everybody a healthy, abundant, and amazing 2017. Get out there and enjoy this awesome community that you live in. Thanks.